If you are about to buy or currently own one of these cars in the UK, you need to watch this now. These 10 cars are draining owners dry through collapsing values, sky-high insurance, mounting repair bills and parts that simply cannot be sourced. Showrooms will never warn you. Dealers are quietly turning away trade-ins. Owners are locked in negative equity, watching money vanish weekly. We ran the full numbers. Here are the 10 worst cars to own in the UK right now. Vauxhall's Mocha Electric is pitched as a modern solution for city drivers, but the numbers tell a different story. 3 years after rolling out of the showroom at £42,000, the average Mocha Electric is worth just £16,000, wiping out over £26,000 in value. That's a retention rate of only 36.8%, verified by CAPHPI, and it's far worse than mainstream rivals like the Kia e-Niro, which holds on to nearly half its value over the same period. For many owners, this collapse means negative equity from the moment the first personal contract purchase payment clears. Insurance isn't cheap either, with annual premiums typically falling between £1,100 and £1,500 for a standard driver, and repair costs for out-of-warranty faults, like a failed infotainment unit or electrical gremlins, can easily run into the thousands. The Mocha's real-world range rarely matches the official 209-mile claim, with most owners reporting 180 to 200 miles at best, especially on the motorway. Oversupply from lease returns and weak demand for used models have left dealers reluctant to accept trade-ins, often offering thousands below market value or refusing outright. Now consider the DS3 E-Tense, which promise premium appeal and a £39,000 price tag. After just 3 years, typical used values have crashed to £11,500, a brutal 29% retention. Despite its badge and a slightly larger battery, the DS3's real-world range hovers around 210 miles, but its reputation has taken a hit from reliability concerns and a 2-star Euro NCAP safety rating. Insurance sits in the same £1,100 to £1,400 range, while depreciation outpaces nearly every rival. Owners find themselves unable to sell privately without slashing prices, and dealers avoid these cars due to parts scarcity and slow-moving stock. Both models reveal the same truth. Early generation electric vehicle tech is now obsolete, and no badge, mainstream or premium, can shield owners from catastrophic losses. For drivers, that means being locked into finance deals on cars that lose value faster than they can pay them off, with no easy exit. Glossy adverts and rugged styling have turned small SUVs like the Jeep Renegade and Nissan Qashqai into UK bestsellers, but behind the showroom polish lie mechanical failures that can double your financial loss overnight. The Jeep Renegade, for example, launched at just over £28,000, now averages a trade-in value of £10,400 after 3 years, a staggering 63% drop. But the pain does not stop there. Owners face transmission failures that cost £3,200 to £4,800 to repair, with electrical faults adding another £2,000 or more. Insurance is not a safe haven either. Annual premiums typically fall between £1,100 and £1,500, and that is if you can even get a quote after a major claim. Parts shortages are a constant headache, with average wait times of 4 to 8 weeks for transmission components or critical electronics. Dealers know the risks. Many refuse Renegade trade-ins outright or slash offers by up to 30% below market value, citing excessive warranty claims and repair liabilities. The Nissan Qashqai tells a similar story. Once the go-to family SUV, it now carries a reputation for catastrophic CVT gearbox failures, repairs that routinely cost £3,800 to £5,200. After 3 years, a Qashqai bought new for £28,000 typically fetches just £13,440, wiping out more than half its value. Insurance premiums hover between £1,000 and £1,400, but that can spike if the car has any outstanding recalls or unresolved faults. Parts delays for gearbox repairs or recall campaigns often stretch from 6 to 12 weeks, leaving owners stranded and out of pocket. Dealers, wary of open recalls and mounting legal risks, are quick to reject trade-ins or offer rock-bottom prices. For buyers, the message is clear. Market popularity means nothing if the car's core components are a ticking time bomb. The real cost is not just depreciation, it is the risk of being locked into a car you cannot afford to fix, cannot easily sell, and cannot trade in without taking a huge financial hit. Battery-powered bargains like the Renault Zoe and MG ZS electric vehicle appear tempting on the used market, but the numbers behind these so-called deals reveal a hidden financial trap. 3 years ago, a new Renault Zoe cost around £31,000. Today, that same car struggles to fetch £10,000, plummeting by more than 67%. The MG ZS electric vehicle, once hailed as the budget-friendly electric option at £34,000, now sits at just £11,000 on dealer forecourts, wiping out 2/3 of its value. Auction houses are flooded with these models, as fleet returns and early adopters rush to offload them before the next battery update makes them even less desirable. The real culprit is battery aging. Owners face the risk of rapid capacity loss just as the warranty clock runs out. A replacement battery module for the Zoe or ZS electric vehicle can cost upwards of £7,000, not including dealer labour or the months-long wait for parts. Even minor charger faults can trigger bills well into 4 figures. Insurance companies have caught on, raising annual premiums for 3-year-old ZS electric vehicles to £1,200 or more, especially if the car's battery health is in question. Private sale listings are often ignored, forcing desperate owners to accept bottom-of-the-barrel trade-in offers, or simply keep a car they no longer trust. This is not just a story of technology moving on, it is a warning about how quickly yesterday's breakthrough becomes today's liability. The collapse in values for the Zoe and ZS electric vehicle is not an isolated case. It is a pattern repeating across early generation and budget electric vehicles. For buyers, the promise of cheap electric motoring can end with a car no one wants, a battery on borrowed time, and repair bills that exceed the car's entire value. Petrol and diesel engines offer no escape from financial turmoil. The Fiat 500X, marketed as a budget city SUV, quickly reveals its true cost. Bought new for just over £23,000, it sheds value at a staggering rate. After 3 years, it is worth only £10,350. That is a loss of more than 55%. But depreciation is only the beginning. The twin-air petrol engine is infamous for timing chain failures, excessive oil use, and turbocharger breakdowns. When the engine fails, owners face bills of £5,000 or more, sometimes higher than the car's market value. Even routine repairs are expensive. A clutch replacement can reach £1,400, and electrical issues often require specialist diagnostics, adding hundreds to the total. For many, the promise of affordable motoring collapses under the weight of unexpected breakdowns and repair costs that make selling the car nearly impossible. Contrast this with the Alfa Romeo Stelvio, a luxury SUV with a £45,000 price tag. After 3 years, trade-in offers rarely top £16,000, a £29,000 loss, wiping out over 64% of its value. The culprit is complex suspension and drivetrain systems prone to failure. An adaptive suspension repair can cost £2,500 per corner, while engine or gearbox faults often exceed £6,000. Parts delays stretch for weeks, and insurance premiums climb above £1,600 per year, reflecting reliability issues and high repair costs. Dealers often refuse Stelvios with warning lights or suspension problems, wary of warranty claims and unsellable stock. Mechanical complexity and brand image can devastate resale value, leaving owners trapped in cars they cannot afford to fix or sell. Land Rover Discovery Sport. Buyers step into a financial minefield. A car that leaves the showroom at £42,000 can be worth just £16,800 3 years later, a £25,000 loss confirmed by CAPHPI. But the real shock comes from the repair shop. Specialist mechanics see air suspension and chassis electronics failures so often that repairs can reach £6,000 per corner. Electrical faults drag out warranty claims, and dealers hesitate to accept trade-ins with these histories. Insurance premiums climb past £1,700, reflecting the risk. The Honda Jazz Hybrid, once trusted for reliability, now sheds value just as fast. £22,000 new, £9,900 after 3 years. Out-of-warranty battery modules cost up to £4,500, and aging electronics add to the bill. Even respected badges offer no shelter from steep losses when core systems fail. There's a way out of this financial minefield, but it takes discipline and a clear plan. First, stick to brands with proven reliability. Toyota, Mazda, Kia and Skoda consistently top the tables for low running costs and strong resale values. Second, never accept the first insurance quote. Use comparison sites to gather at least 3 offers and check if a black box policy or higher voluntary excess will cut premiums. Third, before buying, check the Driver and Vehicle Standards Agency recall database using the car's registration, because active recalls can tank resale value and delay repairs for months. Fourth, calculate total 3-year ownership costs, not just monthly payments. Add up depreciation, insurance, servicing, fuel or charging, and likely repairs. Fifth, demand a full service history and proof of any major repairs before you sign. Sixth, avoid cars with patchy dealer networks or poor parts availability. Wait times cost money. Seventh, if you are financing, run the numbers on negative equity scenarios so you are not trapped if values collapse. The safest deals reward those who check every detail before committing. Right now, UK buyers face cars losing over 50% of their value in under 3 years, £2,000 repair bills that exceed resale prices, and insurance refusals on high-risk models. The market is unforgiving. Do the maths, demand the paperwork, never trust a glossy showroom pitch. Your wallet depends on it.